The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. My name is Darrell Martin, and if you got any questions, I want to let you know, you can go ahead and give me a call. You can reach me right here at 877-927-6648. Again, that's 877-927-6648. And if you have questions about stocks, forex, futures, options, and as you know, Nadex, binaries, and spreads are usually my favorite. Go ahead and, like I said, give me a call, and I'll be happy to help you out. Now, I want to let you know about a few things. We do have our free Denver Live Nadex Dynamic Trading, Diagnostic Trading. We're going through a whole lot of different things. Workshop coming up in Denver. If you're going to be in the area, definitely hop online, register for that. And we're going to be giving away silver bars. We're going to be giving away subscriptions. We're going to be giving away books. So there's a lot of different things coming out that you'll be able to take advantage of. But again, all of it's free. So thanks for Nadex for putting that on. And Dan Cook from Nadex is going to be there. Tom O'Brien's going to be out there. He's going to be talking about identifying the trade and basically like figuring out which trade do you want to do based on what and how he analyzes. And he has some great insight he can bring that I think you're really going to benefit from. That you can ask him questions right there, in person while you're there. So it's sort of nice, very interactive. And then I'm going to go into, Nadex binaries, Nadex spreads, and using deviation levels with them. Also, I'm going to talk about using them on forex and futures. So, all those markets right there. So once we got, sort of how we're going to identify the trade, and once we talk about how to use the deviations with the forex and the binaries and the spreads and the futures, then we're going to go into setting up the trade. Tommy's going to take over on that. And then we're going to tag team on doing risk and money management, which is one of the big challenges as a lot of traders have. And really, it's not, we say risk and money management, I also want to say like risk and profit management. Because with Nadex, as long as you don't trade too big of a position, you're okay. The challenge then becomes your profit management. So that's where the deviation levels come in. We're going to talk about putting both of those pieces together. And but it's going to be great. And again, it's free. So come check it out. And then we'll also, let's see here, we've got a few other things. We're giving away some silver, so make sure to register for the Super Silver giveaway. And right there, and literally just fill out the form, boom, and you're entered to win. And we call you up, and we'll be giving them out pretty consistently here in a few days, like right before, actually, the Denver conference. And then the Diagnostic Box Spread Analyzer. If you want to learn how to trade Nadex, you want to get a head start on the conference, this would definitely be my first step suggestion to you. So if you're registered for the conference, hop on, sign up. There's a 2-week trial, so it's perfect. You get in there, you sign up now. You're going to have a week on there before the conference, so you can get a head start. Then you're going to have a week after the conference to use it. So it's really the perfect time to take advantage of the 2-week trial because it's right in the middle of the live conference that we're going to have. And you get access to the deviation levels. You get access to the binary trading videos. You get access to the bull spread trading videos. You get access to the help desk where you can ask me all the questions you want. And, of course, you get access, number one, to the Diagnostic Box Spread Analyzer, where I grab all the information from the Nadex Exchange Live, do all the calculations instantly, and so instead of spending 20 or 30 minutes trying to figure out the spread, you go, you know what, I want to buy the S&P. What do I buy? This is the one you buy. It makes it really simple, really easy. And with those 3 steps, if you haven't done it already, even if you're not doing all 3 of these, but definitely hop over here and click on Nadex, okay? And you can open an account. You can get a demo account under our products, demo account, and they'll give you 2 weeks free demo account. Now, if you want to know how to get that extended further, email me, and I'll be happy to let you know the way to get that demo extended past the 2 weeks, okay? And then click on Create Account to get a live account, and you can go from start to funded, okay, in like 5 minutes. And all you have to do is put $100 in the account deposit. And there's no platform fees, no data fees, no account fees, on down the list. And but you can literally literally place a trade in 10 minutes. That's how fast you can be set up. So it's very, very cool. Check it out. And just want to make sure everybody just knows about the things coming up so you can take advantage of them. Now, let's check out where the markets are sitting. We got the S&P up 4.5 points. We got the Nasdaq up 8.5. We got the Dow up 40, with the Russell up 3 points. So all the indices right now sitting in positive territory after they ran up and then went back. They actually filled in the gaps, all but the Nasdaq. And sort of funny is I did hop on you this morning. We talked about doing a short Nasdaq trade. I did hop in on that trade, took advantage of it, and got out. And it was actually the only one that didn't fill the gap. And usually I'm the one playing the gaps like crazy. And but I didn't like the gaps this morning. They weren't big enough. But then they got a lot bigger. And I was like, I think I'll hop in and at least play the Nasdaq one. Hopped on there. We did that on the Bull Bear Binary Hour. So if you missed that, make sure you go back and check it out. And you can always listen in on Fridays. Of course, next Friday. Yeah. So basically every Friday from 9 to 10, we have the Bull Bear Binary Hour. All right. And then, of course, I'm on every day from 1 to 2 Eastern Time. But yeah, right here, we were looking at it. We have the short trade. And it's the only one, like all the other ones, boom, got the S&P, the Dow, the Russell all filling their gaps. And NASDAQ, I mean, it was close. And so we had on a spread and a binary short order that we did. Went on down, closed out the binary, took a nice profit on it. Spread started moving back up. Went ahead and got out of that with, very small profit. But figured might as well protect all the made a 200% return on the binaries in about 15 minutes. And but check out the shows. We love to, help you out and get your ideas and give you ideas and just have some fun trading. All right, let's check out. We got gold is up 12, or down, up, down 12 points on the day. We got copper right now, and it's bounced off some deviations. We're going to go into that in a second. We got copper right now. It is down a little over 0.5%. We got silver down over 1.5%. We got corn down just a few bucks, and soybeans up a few bucks. Pretty flat in the ags compared to yesterday's settlement price there. And then we got oil, which is up 28 cents. Natural gas, only up 0.5%. So really quiet day for natural gas. 1 to 4% mover usually, but of course it is a Friday. We got the euro dollar up 78 pips. We got the pound dollar up 9. We have the Aussie dollar down 43. And the U.S. yen is up 71 with the U.S. Canadian up 64. And the U.S. franc is down 6. So a little bit of, mixed results there. But overall, we are seeing with the dollar index that the dollar is weaker. Not an odd thing whenever you see the market being stronger. So, but just a quick market wrap, got you caught up on that. Let's check out what's going on with the fundamentals and what happened yesterday and today. And let's see. So right now, yesterday we had the German manufacturing PMI, but that was yesterday morning. So let's go ahead and skip that one. Go to today. Today we had the German IFO business climate meeting, okay, or the business climate report, and of course the WEF annual meetings have been going on, and they're it has like all the big boys are there. It's a World Economic Forum, and you can actually it's weforum.org. So if you want to check that out, it's all the pretty much everybody is here. So weeconomicforum.com, and some interesting stuff. So you may or may not learn much, but it's they go through a lot, and there's a lot of speakers and I guess big wigs out there. So, but that's going on, and that can have some impact on various markets depending upon what's said. And let's see here, the German IFO business climate. That report came out this morning. Came out better than expected, and helped out with that euro strength. And let's go ahead and let's pull up a euro chart real quick and look at it. So let's go over here, and I'll switch out to this screen. But yeah, so basically the report was positive. It was actually not only positive, it was better than expectations. It's better than the last number. And I want to say, let's see, now last year, though, a little worse than last year. So good, but not as good as last year's report. And let's see, pull it on up. And let's look at how it worked out. Okay, so here's our euro dollar going on in. And the report comes out at 4 a.m., 3 a.m. Central Time. So we're getting it right about here. Okay. And, not a massive impact overall, but I mean the euro dollar still definitely up. Trying to see if there was even an announcement last night or that was just continued dollar weakness. Pretty much that was the main thing. So that's really all we had. So it must have just been the expectation of it moving right there because there really wasn't a whole lot going on. But it did go ahead and climb on up. And then, let's see, we also had the pound at 430. So we'll go ahead and check that one. And let's see, it had the preliminary GDP come out, which is the very important GDP. So you have a few different GDPs, and it's the first estimate. And as you can see, you had a nice big, I mean, you don't even have to know what time it is. You know what time it happened. And as you can see, there's a nice volatile move right there you're going to take advantage of. About 35 pips in a matter of seconds right off that report. It did pull on back, and it's been trying to work its way back down there ever since. So we'll see if it's able to get down there or not. And looking over at the Canadian, the U.S. Canadian had their CPI this morning, and that CPI came in a little worse than expected. And so we're seeing the U.S. CAD rise on up. And it's been having a rough little week. So caught a few trades on that this week. It's been pretty nice. But it got released at 7:30 Central, 8:30 Eastern. So right over here, see a little spike on that. Giving a little strength to the dollar against the Canadian. A little weakness on the Canadian right there. And we have new home sales right here in the United States. New home sales came in worse than expected. They dropped. They thought they'd be at 387,000. They actually came in at 369,000. So not meeting expectations. However, they did revise the previous number up from 377 to 398. So it sort of neutralized the impact of the report. And it's always important that when you are looking at these news reports that you're checking out if there were revisions to the previous number. So if we go right over here, when the report came out at 10 o'clock, and we'll bring it on down a little bit tighter there. What you need to expect is when the report comes out right here. It was a negative report. It did drop, but it didn't have like a lasting impact because the revised numbers basically made last month good, and so it basically just pulled right on back up. And so that's one of those ones where like when I talk about the news trades and I say, hey, when a news comes out and sometimes you're waiting for a pullback and then to get back in it, this is the kind of trade you probably wouldn't be waiting for a pullback on to go back short again. Like I wouldn't be trying to get back short right down here on the S&P based on that. The other big driving factor is we just had a gap fill. It was just trying to fill that gap. All the orders overnight from all the earnings and everything else, everything moving, allows you to take advantage of those gap fills. So one of my favorite plays to do, period. And I love doing it on Nadex because I can't get stopped out of them. Unlike if you try to do them on futures, forex, stock, you can get nailed on gap fill trades. So they have a very high winning ratio without a stop loss, and you can actually do that on Nadex, but still have a stop on your risk. Stay right there. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Just checking out a few different things. We're going to go ahead and go through the markets, check out the deviations for the day. And we also want to make sure, before we do that we talk about next week so you can be ready for what's coming up. Let's see here. So start off the week, quiet Sunday. Nothing happening there. Going on over to Monday, we're going to have core durable goods launching out the week at 8:30 a.m. Eastern time here in the U.S. with pending home sales coming on up at 10 a.m. So those will be a couple ones you're going to have on your calendar to make sure you're just aware of them as they can move the markets. They are stronger impact reports. And then Tuesday, we're going to have CB consumer confidence. So pretty light Monday and Tuesday overall, and I'm looking at the world right here. Not a lot of big impact reports internationally. Wednesday we'll have, big for us, we're going to have ADP non-farm employment change, advanced GDP, FOMC statement, federal funds rate, and so all that's coming out right in the U.S. So Wednesday we should definitely expect some volatility with the very light news announcements of the first 2 days, absent of earnings causing major movements. It should be pretty, especially on Tuesday, pretty quiet as everybody. And then, of course, Wednesday, just be aware, it'll be, we're going to have a big move. This is how usually the market plays out. Let's go back and look at the previous days this has happened. But you're going to have a big move off the initial, ADP and advanced GDP, all that coming out. And then it'll go just flat and wait on the FOMC statement. And when that comes out, then it, moves again. So, but, there's a lot of different ways to play that. And let's check out Let's see, Thursday. So we're going to have a Canadian dollar trade finally, 8:30 a.m. We'll have unemployment claims here in the U.S. There we go. Finally, we get an Aussie trade next Thursday night, 7:30 p.m. Their PPI comes out. So a nice high-impact trade that you can take advantage of outside of normal hours. I like to let people know about those. And then Friday, pound manufacturing PMI. And then we'll have our non-farm employment change, our unemployment rate, and our ISM. So some pretty big announcements in the U.S. next week. Pretty quiet overall across the board. And, of course, we'll keep you up to date, and we'll go into more detail next week. But I just sort of let you know. So, a lot of U.S. news coming out. Most of the news coming out of the other countries is relatively medium or mild impact. And that lets you help plan out your week. So now let's go ahead and check out some deviations. Let's go through the chart, see where everything looks like it might be heading. And right here, what we got going on, let's go to the S&P 500. And we back it on out to some 10-minute bars here. There we go. All right, so the S&P, how did it do on the statistical deviations? How can it help you? How did it help you if you were using them? Well, we got right here, this is one of the biggest missing pieces I always talk about in people's trading is they don't use statistics in their trading. But let's see here. We had a high move up to, 1497.5. Well, you know what? That actually is perfect. We plotted 1497.7 rounded, of course, to 0.75 or 0.5, but depending on your bid or ask. So, and we always say within 4 ticks, or actually I said within 5 ticks. It's always considered a hit. Well, that was within, 1 tick. So perfect half deviation move on the S&P 500, or less 1 tick, depending on how you want to look at it. Either way, that should let you know at this point you are tightening your stops if you're long the S&P. Okay? And so that played out pretty well. And then flipping it on around, 1485.9 was the low side we were looking for. We didn't get that. If it does decide to break out over here, if the S&P decides to keep on moving, then we'd be looking for a move on up to the next level would be 1500. So not too far right there, but that'd be our next level. We'd be looking to tighten stops on the 10-minute bar that broke that. And if it keeps going, we're looking on up to 1503.5. So right on up here. Okay? So 1503.5. And that takes care of basically the S&P for us. And then we'll go on down to the NASDAQ. So on the NASDAQ, starting to plot some of these on there, but we got a move 2730 would actually been our first deviation level. Okay, so if we drop that one out, 2730, we had that overnight. We had it again, like right on the open when it took off, and then the next level would be looking for the move on up to from 2730. We were looking for 2734. We got that one, and then from there we're looking for 2742. Didn't quite hit the 2742 level up here. Turned around, came on back down. Perfect retracement right back to that half deviation level. Would have had to make it back to 2718 for the gap fill. Just a little bit shy. And it literally just bouncing between half deviation. Right there, you can see back and forth, back and forth. So, nice swing trades going on. You can use it on Nadex as well. Stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. And we are checking out a few different things. One of the main things we're going through right now is the deviation levels. And it's making sure that you understand basically just how to use them, how to put them together. And my favorite ways to use them is to actually, I'll put them on all my charts so I know they're there. And then I'll hop to 10-minute charts to use them to help me with tightening stops. And I mean, like right here, I mean, this is perfect, nice little swing trade right here. And now, the swing trade, I wouldn't necessarily just hop in, and I'd like to see a bar close and get a chance to get in. So let me show you this. Okay, let's say you're swing trading this, okay? So just because it touches the level, and I wouldn't necessarily buy. Why? Well, because, I mean, you don't know it's going to be a swing trade. At least I want to see the market go in my direction a little bit first. So by my direction, I mean like breaking a previous bar's high. So I'm only going for, maybe a few points, but if you can get 3 or 4 points over and over, not bad. And so you're going for just a few points right there. This is good for like 2-hour binaries. So it's a really good use of them. And also 2-hour spreads. And because there'll be like little to no premium, you can make some nice change on them. And they're really tight on their strikes. So you go in there. And when it gets up here, you're basically looking to get out. You're not looking to ride it. Okay. So it gets up, boom, you're out. It comes over here, goes down, you're out. Okay. Here, you're really wanting to trade. You didn't get a chance to get into it. This one, you have to go short. Okay, and then you got to go long. And so just using that over and over again, sort of a simple strategy, but it's one way to swing trade if you're seeing just an oscillating range using the index's deviations. Now let's go ahead and check out the Dow. And, of course, it did fill its gap this morning as well. And on the Dow, went on up, let's see, to a high of 13,829. And you see right there, high of 13,829, okay, overnight. And did it hit that again? Let's see, 13,827, 13,825. So, hit that high. And that high just happens to be, you know, and we show these, like I said, every day here, happens to be 13,829 was our first level that we're going for. And so that shows you right there, we already hit the deviation, okay? And really would not give you a bullish bias once it falls back below it. So, because that 13,829 right there, and you're really looking for it to, you know, hit and then obviously, hopefully break through it. And has not yet been able to break through that deviation level, but it did come back and fill in that gap. And as soon as it did, now it went right back up to the deviation, and basically just playing that range now. Looking on over, and we post these at 7 o'clock each night, so you can get access to them. Let's see here. Got 7 o'clock Eastern time, and then natural gas. So natural gas right here, been pretty tight trading range today. So it's one that usually we see a lot more movement out of. But nevertheless, we did have an expectation that it moved to 3.475, and it did. Okay, and then we had an expectation that it'd move lower to 3.417, and right there. And that range right there is a full deviation. So the middle being half a deviation up, half a deviation down. So when half a deviation down, went back up, when half a deviation up, came back down, didn't come all the way back down. But basically just trading within a 1 deviation range. And that's, you know, we said the deviation range on natural gas would be 0.058. And so that's basically what a full deviation is right there. So 0.029 up, 0.029 down, 0.058 total move on natural gas. And let's see, looking on over at crude oil. So on crude oil, checking out the markets real quick, seeing where it went up, where it went down. Did it stay within its parameters? And basically, did it do what the market said it was going to do? So we said the market said that oil was going to go down to 96.60. And there's 96.60. It hit it. It turned around perfectly. The market said oil would go, or sorry, yeah. And then let's see, the market said the market would go up to 96.60 up here. And so that's where we got this over right here. So literally it's right within that deviation range. And then looking on over at gold, we got gold right here. Moving on down to the low side, 16. Not quite yet. Let's see. We might have 1665.1. And what was the low? It was 1655. So perfect. 1655.1 is what we expected on the move there. And so we did get that down on that 1655. And then we got 1665. So let's look at all the levels. There's multiple levels you can look at. But I like to track, whenever I'm trading them, I like to trade them all the way. So you're starting up here, obviously, you're using the close, 1669. And then we're moving on down from 1669 to 1665. Okay? So 1665.1. And you can see, like, right there, it actually played within that range. Okay? So right there. And then start moving down further. And then we got 1663.1 right here. And then it moved on down to 1660.2. Okay. And then we're looking for a move even further down to 1655.4. So, and that right there would have been a 1.5 deviation move on gold. We've basically just been playing in that range right there for most of the day. So that's the gold moves right there, and you can see how it just literally oscillated right off each one of the levels. And then going into silver, on silver over here, let's see, 31.72, so we were looking for a move down, and 31.50, 31.42, 31.29. Did we get 31.29? We did. If it moved further, we were expecting a move on down to 31.07. I don't think we hit that. Came pretty close. Did not hit it. So that was the first. That was the full deviation move right there. 31.29. We moved to 31.42. So right here. Okay, and you can see it hit that level, pop back up, and again use this as a resistance, basically as a support level, which also in turn became a resistance level. And then you go on over to silver, a little bit higher. That brings us up to 31.50. So that would just be like order at 0.5, and then of course we have the close right here. So this is basically our first range that we're looking at. It breaks through that, and then falls on down this next level. If it was going to fall further, if you're still trading in the after hours market here, the next move is projected to go down to 31.07 right here. This is the projected range. If it does continue to move down right now, that'd be the next level we'd be tightening our stop at. Now, going on in a little bit more here, we got copper. So on copper, moving on down, let's see, this will wrap up the metals for us. We got a low of 3.6435, and we're looking for copper to move on down to 3.635. And so as you can see, did perfect. So we got that right there. Moving on down, basically hit almost a full deviation on the 3.645. We got the 0.7 deviation, and so at any one of those levels, anytime it breaks it, then you can look to tighten your stop up on the trade. And you're looking for it to break and close below it, by the way. So not just hit it, but close below it. Pardon me. On the downside. On the upside, you're looking for it to close above it. And then looking on over to corn. On the corn trade we have over here, and corn's been pretty flat today, and but that was accounted for in the market. And that's the nice thing about the deviations; they do change wildly. I've seen them in the past week. I've seen them, at 15 points. I've seen them at 8 points. So they definitely, it's the options market telling us how far the market's going to move. And that moved on down to 720 right there on corn, and 718.3 was the next goal. We did hit that. And before that 720 move, we were going, let's see here, basically at the open. So right here. And then on the upside, we have an expectation up to 728.6. Right to this level up here. And it did not quite hit a half deviation move up, but definitely did feel a half deviation move down along with 0.7 deviation move down right there. Pardon me. All right, got my breath back there. And Aussie dollar. Okay, so Aussie dollar on over here. Aussie dollar had a nice little move. So moving on down to 1.402 Aussie dollar. 1.402 is a perfect one deviation move, literally to the tick. And so it hit that right there. That'd have been, that's just excellent trade in every way. So, it's a nice trend and moved right to its deviation, stopped right on the deviation. So statistically, basically, the market's really reflecting the accuracy from the implied volatility in the options. And then going on down a little bit further, we got 1.0426. And then going on back up, let's see, 1.045. It's just been moving like crazy. And then let's see here, we'll get a little bit more. Yeah, that's pretty much the main move, I guess, since yesterday. Movement right there, but a lot of oscillation on the upside. We go to 1.0474, so it didn't quite hit that level today. Just oscillated around it, but when it finally decided to move, it went down, and like I said, perfect one deviation move down. And then euro dollar on up 1.3478. 1.3478 is going to take us up to past one deviation, which is 1.3451 right here, and then up a little bit higher to 1.3487. Okay, so 1.3487. So we haven't quite moved on up to 1.3487, but that would put us at a 1.5 deviation. So we already got the full deviation. It's sort of chilling out right now. And we would have been able to tighten the stops a few times before that on the way up and take advantage of it. If we would have tightened those stops on the way up, we would have been tightening at 1.3429. So right in here, let me zoom in for you. And You can see there's some nice range-bound traffic right there. And you would have been able to tighten it one more time before that on the 1.3414 break, which happened right there. So this bar, you would have tightened it up. This bar, you would have tightened right there, okay? So you've tightened it, it's done its thing. Then all of a sudden this bar breaks, and now you're tightening it again, okay? And you're going for this next level. You're sort of giving it some room. And, you may want to tighten your stop at this point because, I mean, you've got a nice move. If you're riding this long euro-dollar up, then you're up a pretty nice piece of change right now. And about 110 pips. So from 360 to 1.3360 to 1.3478. So it definitely is a nice move. And the deviations definitely helped you. What they did for you is they didn't just give you target levels, which is one thing they do. They give you target levels. They give you trailing stops. The thing is they give you proper expectations. And here's why it helps me as a trader. With those expectations, I'm able to let the market move and chill out for a second. So it's like, it takes off, and part of you just, should I take my profit now? I don't want to give it all back, and all those things are going on in your head. And but if you allow the market to move a little bit, you don't want to take your profits too soon. And so sort of waiting on it to hit this level, and then boom, okay, I'm going to tighten my stop again. So I had it here, and I moved it up, pretty good amount on the next move, right here. And then whenever this one broke, I moved it up again. And then, so the only reason I might move it up again is because we're already, this is a massive difference right here, and we've actually passed the deviation now. So now that we passed the one deviation, I may decide to tighten it up. A couple of the ways that I can tighten it up is, and one of the things I recommend, I talked about this yesterday on the show, is when you break through the deviation level, okay? That's when you tighten, you close up there, you tighten that stop. So there's two different ways to tighten that stop. We got the breakthrough, that is the immediate way you could tighten it if you wanted to. But also you have the one that closed above the deviation. So if I zoom in on the chart a little bit more right here, you could tighten it right there. That would have stopped you out already, okay? But the other thing you can do, let's say if you didn't tighten this one, you just tighten this one right here, which would be pretty crazy because it moves so far. But let's just say you didn't do it, okay? And you use this as your bar as an instance here. If it pulls back down and has a high below the deviation level, then tighten your stop on the bar that breaks it again. So this bar right here broke it again. So now we've tightened our stop to this level right here. And we can tighten it again if it either comes back below and breaks through or if it hits another level. But that allows us at this point, we have a stop at 3.438 on our long trade that's, currently sitting at, 3.462. And we've been able to write it a lot and give it room to move and have confidence to go, hey, this is where it could move to next. And I'm going to give it some room to breathe. So I don't give, basically, because otherwise you get out and you miss out on the next 50 or 60 or 70 pips. So it really gives you the chance to go in and take advantage of the market movement, but give you an objective way to trail your stops and an objective way to have profit targets, an objective way to let your profits run, and put the whole piece together. And of course, with Nadex, your stops can't grow, so you don't have to worry about it. And we'll come back. We'll wrap up a few more currency pairs right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're doing a final wrap-up on the deviation levels. We got a few more levels to go through real quick. And it's just good to, I want to make sure people understand how to use them. I want to understand, are you looking at the market with statistics in mind? Because it really helps you focus on where the market says the market's going to go. Not where you think it's going to go, not where your support and resistance lines say, and not where your pivot levels say, and not even where your standard deviations of yesterday say. But where does the market say the market's going to go today? Okay? And it's sort of, think about this ultimate barometer. If it's going to go up, it's going to go this far, and you get all this massive consensus. Well, that's what it is, because the options market is the actual people with money in the market, not just people voting on some random survey website. People with money in the market. Not just people, not just traders, not just individual traders, but investors and funds and Wall Street. Everybody combined in the market, okay? And so, who do you think's playing the options in the futures market on a large scale, okay? That's obviously going to be funds hedging positions and certain things happening. So those expectations are built into the options price, so it gives you a very, very good market consensus of what to expect. We will move on up to 91.18 on U.S. yen. That takes us just a little past 1.5 deviations. It really just took off this morning. And right up there. And let's see, 90.97. Well, that was our high right there. So we've got 90.97. That's actually our 1 deviation mark. And that's a pretty good area. If you would have taken profit at any point along the way here, you'd have been pretty happy because it's just been oscillating ever since. And then looking on over, we got 90.79. So they had that one a little bit lower down here, 90.79. But when it broke it decided to keep on going there. So we had that, and then so you literally go back a little bit lower. And your next level before 90.79 on the U.S. yen was 90.67 right here. So that puts all these together for us, and just sort of let you see the picture of where it said the market should move to from the previous day's close on each level. And you can use that for, like I said, tightening stops, profit targets, letting your profits run, but not letting your stops get away from you. And they're also very useful for determining a trend change. And that's one of the ways that I like to use them as well. But I make sure that they're, basically after they've busted through, that they're busting back before I look at a trend change. So sort of more of a confirmation move on a trend change than simply I'm going to buy or sell right off of the support resistance line. Because anybody who's done that for any length of time that just buys off support resistance without other filters has found it doesn't work very well over a long period of time. So you need something else to do that, such as price action moving back in your direction. You don't buy into a falling market. You do buy on the dips, but you at least make it bump back up and get some volume and everything else going in your favor before you just turn around and start going against the market. We'll get on over at U.S. franc. So U.S. franc right here, we had an expectation of a move down to 92.35 right there. One deviation move on the U.S. franc, and you would have had several places along the way that you could have tightened your stops. You got 92.51, so you could have done that right here on this bar, and then you got a 92.61, so just like right above that on this bar right here. So you could have tightened your stops there. You could have tightened them again there. You could have tightened them again here. So you had multiple chances to where you could have tightened your stops. And you would have got stopped out right about here. So pretty close to the low of the day. Not too bad. And again, we're not trying to get the highs and lows, but we are trying to get as much of the move as we can. And if you can get a decent chunk of the move every day, if you get a deviation, you're a rock star. So that's what this is all about, is helping you know how much should you be going for. So you're not shooting for the moon. You're just shooting for winning trades on a consistent basis. All right, well, I hope you all have a great day. Have a safe day. Have an awesome weekend. And we'll see you right back here on TFN on Monday. Stay tuned. We have another great show coming right up for you.